Houston new construction market is currently exploding right now, but did you know that there are hidden deals where builders are practically begging investors to buy their inventory? I'm currently seeing massive buying opportunities and price reduction in Houston, Texas. Right now, property like this, and even this in this current market, and that could set you up for a serious cash flow, long-term appreciation if you work with the right team. Hey, if you are new here, I am Wale Lawal. I'm an investor agent based in Houston, Texas. I'm also a rental property myself. So if you're looking for help, feel free to reach out to me. I would love to help you. So when I bought my first new construction rental property in Spring, Texas back in 2019, I honestly thought I overpaid. Everyone around me was just telling me to go and buy older houses because they believe they're going to cash flow better. They also believe I can force equity and force appreciation into it, which is true. But here is what happened. That property went up over $120,000 in equity in just 3 years, just because it was a new construction. Maintenance costs were almost zeros, and I rarely receive any call from the tenant because it's a new construction. So one of my clients, Vivek, who is an IT consultant from San Diego, California, recently closed on a new construction in Cypress, Texas, with only 5% down payment. The builder gave him $24,000 in incentives, plus they brought down his interest rate from 6.8 to 5.5%. This is a permanent rate buy down, not a temporary or 2-1 buy down that most realtors advertise. His monthly cash flow is solid, and he hasn't had a single maintenance call in 6 months since he closed on the property. Plus, I show him how to automate his rental property management, so no single tenant call as well since he closed on the property. That is the power of knowing how to buy the right new construction deal in Houston and working with the right real estate investor agent. So in this video, I'm breaking down why Houston new construction is a gold mine for real estate investors right now that are savvy and that really want to take action. I also walk you through the exact incentives builders are offering right now that most real estate agents don't advertise or they don't even know about. I also walk you through the best and highest rental demand area for long-term equity growth and appreciation. I also tell you how to negotiate a massive builder incentives and lower your purchase price even as an out-of-state or an international investor. So you want to stick around till the end of the video because I will share with you my personal strategy for how to negotiate your closing costs, rate buy down, among other things, to maximize your return on investment and start building wealth through real estate. Now, this is a big one. According to Houston Association of Realtors, HAR, new construction inventory is up for 35% compared to last year, and builders are slashing prices and offering crazy incentives up to 6% in incentives just for you to buy their property because they have all this huge inventory they don't like to keep. Houston single-family home sales has recorded their largest year-to-date increase in May 2025. Sales has rose 6.8% year over year, with 9,058 homes sold compared to 8,483 during the same time last year. This activity is a clear indicator that we are absolutely in a solid buyer's market, which is a huge opportunity for savvy investors like you to be taking action right now. So without further ado, I'm going to walk you through my 7 tactical strategies to get the best deal on a new construction in Houston, Texas in 2025. So the strategy number 1 is to understand the current builder's landscape. You want to understand which builder has a lot of inventory that are looking to give you a lot of incentives. Builder like your Lennar, DR Alton, Starlight Homes, Centex Home, even Perry Homes are holding more inventories than they projected for in 2025 due to higher interest rate that is slowing down the buyer's activity and the demand for their product. What does this mean for you as an investor? It means that this is the time for you to be buying because this builder actually need you for you to buy their products or to absorb these homes quickly before their holding costs, their carrying costs eat into their projected profit. So this is why they are giving you 40,000, 50,000, as the case may be, in incentives, just because they want to get rid of those inventory. The second strategy is that you want to identify investor-friendly subdivisions. You see, not all neighborhoods are created equal. You want to look for neighborhoods with strong rental demand than the builder always allow investors to buy. You want to buy in a place where there is jobs, like your Amazon warehouse, there is major hospitals, there is energy, there is manufacturing. Also, you want to buy in a place with less HOA restriction on long-term rental or short-term rental, if that's your plan. Also, you want to buy in a place with lower property taxes. Typically, you want to target 2.7% or below for cash flow. Right now, I'm seeing killer deals in Sonterra, Aniston by Lennar. I'm also seeing some deals in Tamaron by DR Alton and some other divisions from Starlight Home, from Century Complete, from KB Home, even from the likes of your big builder like David Weekley. So if you're ready to take action, this is the best time to jump in, because all these incentives will definitely go away once interest rates soften or the market soften a little bit. And that takes me to strategy number 3, which is you want to leverage the builders' incentives. The incentive they are giving you, you want to leverage it to your own advantage. Right now, builders are giving interest rates as low as 4.9% to 5.5% for real estate investors like you. They are also reducing the price from 20,000 by 20,000, 30,000, 40,000, as the case may be, and they are giving it to you as a form of a seller's credit, or you call it closing costs. They also pay all your closing costs for you so that you can come out of pocket with as little as money possible. The only thing you have to bring to the closing table is your down payment. If you're buying with 5% down, you bring 5% down payment to the closing table. If you're buying with 20%, you bring 20% to the closing table. Now, they're also giving you all kind of free incentives like your blind, your appliances, garage door openers, sprinkler system, among other things that are value around $5,000 to $8,000, and they are giving all this to you for free. But here is the secret: they don't advertise their maximum incentives publicly. That is where the value of your real estate investor agent like me comes into play, because I can negotiate those additional incentives on your behalf that you just don't see on the public market. Now, the strategy number 4 is to calculate your all-in cash required. If you are buying an investment property, typically you will need 20% down payment. So new construction deal that are priced between $220,000 to $320,000, the down payment will, for 5% to 25%, will depend on your financial situation and the kind of financing you are getting. Of course, the closing cost will be around $8,000 to $12,000, because the builder cover all your closing costs and all your other fees that you have to pay. So the total cash you will need is as low as $11,000 to $80,000, depending on your financing type and your unique situation. So again, you can put between 5% down up to 25% down payment. And this takes me to my strategy number 5, which is get financing as early as possible, aka get a pre-approval letter. Builders actually prefer you going through the pre-approval letter with their in-house lender, because most builders have an in-house lender. In order for them to release their maximum incentive, of course, you can still shop around with your own preferred mortgage lender or with your own loan officers, but they really want you to use their own in-house lender so they can release the maximum incentive to you. And above all, they want to make sure you are a serious buyer. You are not just wasting their time. This takes me to my strategy number 6, which is you want to now run the rental analysis before you even make an offer. You always want to run a conservative rental comparable. I typically use Rentometer, and I also recommend you work with a local realtor, because they have access to MLS data that can help you confirm the current market rent, the market demand, and you also want to factor in 1 or 2% for your maintenance, even though you're buying a new construction, and also factor in 5% vacancy. If you want to get my rental calculator or my rental spreadsheet I typically use, comment the word analysis in the comment section below and I will send it to you. This has saved me thousands of dollars and saved a lot of my investors thousands of dollars as well, because it's a very comprehensive Excel spreadsheet that walk you through all the factors and all the numbers that really matters that you should factor in when you are analyzing a rental property. So comment the word analysis and I will send it to you. And if you want to get the list of buildings builders are crazily giving incentives. I have a full list of them. Reach out to me. You can find my contact information in the description below. I'll be able to understand your situation and send you to the right builder that can help you maximize your return on investment. And this takes me to my number 7, which is the last one. You want to close strategically. Aim to close towards the month end, because this will reduce your cash required you need to bring to the closing, and ensure that your lender lock in your interest rate at the best time at the best rate possible, because this will save you a lot of money on the long run. So if you are finding value in this channel, please make sure to like it and subscribe to my channel, and make sure to click on that notification bell so I can let you know the next time I have a new video. And above all, feel free to share this video with anybody you think will benefit from it, because this is a wealth of information I'm sharing for free, and I hope you will not be selfish with the information. So here is the truth. Investing in new construction isn't all about finding the cheap deal in a place that nobody actually wants to live. It's about buying smart in a best neighborhood you can find for long-term stability and appreciation with minimal headache, especially if you're managing rental property from California, from New York, from New Jersey, from Canada, or from overseas. Now remember, there is no pressure here to scale fast. Just stay consistent, buy one deal every single year, and you will see how it will compound to a life-changing wealth machine. Thank you so much for watching till the end. I actually want you to watch this next video right here, where I break down how investing in Houston real estate will make you rich in 2025 and beyond. Trust me, you're going to find a lot of value there. Once again, I'm Wale Lawal. I'm an investor agent and a rental property investor based in Houston, Texas, and I've helped a lot of people to start and scale their rental portfolio. So if you think you need my help, or you think I can help you in any way, please don't be shy. Reach out to me and I would love to help you. Thank you. I will see you in this video. Bye-bye.